friends. I'm Katie Z.
And I'm Madison Maines.
And welcome to the very first episode of Stable Foundations with Katie Z and Madison. We're the foundation lending team at Atlantic Coast Mortgage.
We are so glad y'all are here today, whether you're tuning in on your lunch break or just catching the replay on Spotify, Apple Podcasts, or YouTube.
Wow, that is so many options to listen. And wherever you're listening, today we're laying out the foundation for everything you can expect from this podcast. Why we built it, who it's for, and how you can use it.
Yep.
So, Madison, why don't we tell them a little bit about us?
Let's do it.
All right. So Madison and I are mortgage advisors and strategists. We serve from West Virginia and Virginia down the coast all the way to Florida, and then we hop over to Georgia and Texas.
Yep. No matter where we're doing it, we absolutely love what we do. Getting to know our clients and being part of their story is genuinely the best part of this job.
I'm so glad that you said that. You guys are going to see this through the podcast that, well, Madison and I are a lot alike. We decided to work together because we share the same heart for this business. We care genuinely about people. We're devoted to education, and we focus on making sure our clients feel supported all the way through every chapter of their financial journey.
Yeah, when we say we want the best outcome for you, we do genuinely mean it. A lot of our clients are starting fresh after major life changes, or buying their first home, or growing their families, launching a business.
Oh, that's one of my favorites. And those chapters require thoughtful planning and honest conversations. We don't want to be here only during the loan process. We're a steady resource through all the things that come after.
Yep.
So why don't we answer the other big question? Why a podcast?
Why a podcast? Well, the short version is because life is busy.
Yeah, isn't that the truth? Before Madison and I came together, I hosted in-person workshops and webinars and coffee chats. But honestly, getting a group of people in the same room who actually want to learn this information at the same time, it is nearly impossible.
Yeah, it can be hard. Everyone works 8 to 5, 9 to 5, whatever your schedule is, and you got to rush home to your kids, the sports, pets, dinner, homework, whatever it is. It's a lot.
Oh, yeah. We talk a lot about pets in our day-to-day life and how much our dogs influence what we do. So we've created a format that endeavors to meet you where you are. And honestly, kudos to Matthew Zackerly, my husband. He inspired this because what does he do? Listen to podcasts on his lunch break. So we hope you will listen to this on your lunch break while you're driving, anytime.
We record live the first Wednesday of every month at 12 p.m. Eastern Time. And you can ask questions in real time if you do want to join us live.
That's awesome. And, catch the replay. You can message us. We're always happy to follow up or connect you with the guest speakers.
Yep.
So let's talk about who the podcast is really designed for. So listen up. Is this you?
The podcast is designed for any and everybody. So first-time homebuyers, people rebuilding after a divorce, investors, families growing or downsizing, business owners, and honestly, even other professionals like real estate agents or financial advisors.
Yeah, so basically, if you're interested in building your financial life on purpose, this is for you. Our goal is to give you the why behind the decisions that shape your financial path and to empower you to make strong choices with clarity.
Yes.
And that's how we approach everything, right?
Yes.
So we're excited to talk about the lineup of topics and guests that we're bringing this year. And Madison had a lot to do with this.
Yes, we've got a ton of people that we'll have bringing on as guest speakers. So real estate professionals, wealth advisors, divorce planning experts, credit specialists, insurance professionals, local entrepreneurs, and even clients who have their own inspiring journeys to share.
Oh, yes. Those are our favorites. So the point is, we chose our guests intentionally. These are people who bring insight, generosity, and real-world experience, and they're not here to talk at you or sell you anything. They're really honestly here to lift you up.
Yeah, and the best part is every topic comes directly from the store of things that we don't always get to work with through in the heat of qualifying for and purchasing a home. So credit, home improvement, protecting your family if you or a loved one gets sick, property taxes, investing, selling, refinancing, insurance, everything.
Yeah, it's a lot of topics, it's a lot of hard hitters, but we'll keep it interesting and helpful. So how do you use this podcast? As a tool, you're going to listen in monthly, you're going to take notes, you're going to send us questions, and you're going to share this episode and all the future ones with those that you think would benefit from the information.
But first and foremost, this is a pressure-free education-first space. No sales pitch, just clarity.
So when you want personalized guidance, though, that's where we step in as mortgage advisors and strategists. think of the podcast like the front porch.
And we're the open door welcoming you into the next step.
Gosh, I love that. So we thought, in honor of this being the first episode, we would talk about a topic. And, it's January 2026. So what is January, if not the time to make predictions?
Yes, specifically, we have got an article that we're going through. It's Redfin's 2026 housing market prediction. So we want to kind of break some of this stuff down because we are at the beginning of 2026. So why not talk about what everyone's thinking or expecting, what's going to happen? So
I'm going to add a disclaimer. Like she's already said, these are Redfin's predictions. These are not the Madison and Katie Z predictions. And if we had a crystal ball and we could genuinely guarantee results, we would not be mortgage lenders. We would be guiding the universe.
Yes.
So we'll get started.
Well, let's jump into what Redfin is calling the Great Housing Reset of 2026, which is basically a forecast showing how the real estate market could shift next year.
All right. So just to set the stage, this isn't about sudden crashes or dramatic booms. Redfin describes 2026 as more of that long, slow period of improvement where things start balancing out for buyers and sellers, which actually sounds pretty good.
It does. So number one prediction is that mortgage rates will stay in the low 6% range. Redfin predicts that the average 30-year fixed mortgage rate will sit around the low 6% range in 2026, so slightly lower than 2025, but not returning to the historically low pandemic rates. So that means rates might dip below 6% occasionally, but they wouldn't stay there for very long.
That sounds like a good and fact-based prediction. We have seen rates slowly dropping all year, and this is a good move. I'm really personally glad that we are not projected to hit COVID rates ever again, and we can have a whole discussion about that another day. I just have personal concerns about what that means for the economy, for the world, everything else. But that small drop still matters. Even a slight shift can bring a few more buyers back into the market, especially those who were priced out last year or any of the years before. We've seen already how sensitive people are to even a quarter point or a half a point change in rates. And I want to add, I can't sit here and tell you, a half a point will reduce your mortgage by $100 or $200 or $700. There's so many variables there depending upon your loan amount, your loan type, et cetera, et cetera. But this does mean exactly what they've said. It should be attractive for people to enter the market or to consider refinancing, to pull out cash, to get rid of debt, to finance renovations or any other project that they need.
Yes, exactly. It's not fireworks, but it is meaningful, especially for the buyers who've been sitting on sidelines because of high borrowing costs.
Yeah, I think, we're talking to a lot of people that feel that way.
Yes.
This one's interesting.
Yeah, Redfin's number two prediction that we want to break down. So affordability improves as wages outpace home prices. So prediction number two gets into something pretty significant. Redfin is stating that home buying should become more affordable next year, and not because prices are going to plummet, but because wages are expected to grow faster than home prices.
That is a big one with a lot to unpack. Let's answer with common sense first. When income rises faster than home values, even modest price increases don't hit buyers as hard. If the cost of bread goes up 50 cents, but you've gotten $1 an hour raise, that doesn't affect you as much. So I want to pause there and say that feels interesting. Where are they getting this prediction for wage increases?
I would say that's the one tidbit that we pulled from this article that we were poking holes in, and we'll drop the Redfin article in the podcast link. But I think that's what you see usually in a national headline is not always what you're feeling on a local level. Katie and I were curious to see what job sectors they're pulling that data from, because that doesn't necessarily feel like what we see in our own market. The fact that they're saying that wages are going to surpass home prices, that's the first time they've said that in a while.
Yeah, I hope that it's true. And I'm really curious what you, the audience, are feeling and seeing. Redfin was expecting a price growth of only about 1%. And I want to say that in 2024, across the nation, the average appreciation, so comparing the high, appreciation states and the low appreciation states, was about 6.7%. We're still working out what 2025's appreciation rates were. At one point, it was 4.7, then it was 3 point something. And now I think The later quarters were more like 2.2, 2.3. So all the numbers aren't out yet. It's only, the 6th of January?
Yes.
I've lost space and time. So 1% price increase is a really low prediction compared with what we have seen in the last several years. My thought is we're probably leaning more towards like a 3.3% increase. And I'm basing that just on what we've seen and what we're seeing in the Richmond market specifically.
Yeah, but bottom line, so monthly payments might not feel cheap, but they grow slower than paychecks, which gives buyers the real breathing room. So it's the kind of slow normalization that the market hasn't seen in years, really.
I'm glad you wrapped it up that way. That's nice. So that's one, again, I think we both hope is true.
Yeah, absolutely.
And we'll just see.
So the last major prediction, Redfin forecasts existing home sales increasing roughly 3% in 2026. So that means we'll probably see more sales than last year, but not some huge sprint.
Right, and that's more like a steady climb rather than a race. And that fits with the overall theme that they had for the article, that slow recovery, more balance, but not a market that suddenly flips overnight, which is great because the mortgage industry, the real estate industry, you all have ears and eyes. You see the headlines. There's always a prediction that things are about to boom or things are about to crash. And this is saying, I think it's kind of a safe place to be treading.
The market is slowly correcting itself. And personally, from the realtors that we've worked with, we're just seeing more buyers are essentially cautiously stepping back in as conditions ease a bit, which is a good thing.
That is great. And we are seeing a lot more applications, even just a few days into the year. So I think 2026 is going to be a totally banger year for every party involved.
I do too. So if we boil it down for 2026, per Redfin's article, number 1, mortgage rates should settle in the low 6% range. Number 2, affordability improves as wages outpace home price growth. And number 3, home sales are expected to tick up, but modestly.
So that means next year looks less like market chaos and more like market normalization. Not instant relief, but progress that matters to both buyers and sellers, and again, to those of us out there who might want to refinance, pull out cash, eliminate debt, or finance a project.
Yep, and again, we're still in the beginning stages of 2026, so no one has a crystal ball. We don't know what happens until it actually does, so because of that, we'll be watching how all this actually plays out, especially as local markets can vary a lot. So stay tuned.
Awesome. So that's just a little taste of what you're going to get with Stable Foundations with Katie Z and Madison. And you can find Stable Foundations with Katie Z and Madison on Spotify, on Apple Podcasts, YouTube, and in clips across our social media.
Yes, and remember, we do record live on the first Wednesday of each month at noon, so come join us, ask questions, and be part of the conversation.
But before we wrap up this intro episode, we want to hear from you. Send us your topic suggestions, your questions, and the names of people that you think that we should feature.
Yeah, the podcast is built for you, your real life, your goals, and your financial journey.
Yeah, and we've got a plan, but again, we want to hear from you. We're honored you're here, and we can't wait to help you grow one brick at a time.
Thank you guys for joining us for episode 1 of Stable Foundations. We'll see you next month, live at noon on the first Wednesday.
And until then, stay curious, take care, and keep building your smartest pathway home.
Bye, friends.